you've been advocating for the so-called Bitcoin standard. What do you mean by that?
I think that there's $500 trillion of monetary assets in the world, split between currencies, bonds, real estate, instruments, equities, precious metals that are being held as money, etc. Most of those are fiat derivatives, and so they derive their value in part or in whole from the expectation of future fiat cash flows. And I think right now in the world, you have a set of strong currencies losing 1% or more of their value a month. That'd be the US dollar and the euro, and everything pegged to the dollar and the euro. And I think you've got a set of weaker currencies losing 2% of their value a month. And then you've got a set of currencies that are collapsing. They're losing 3 to 4% of their value a month. All of the companies and the bonds and the commercial real estate in those economies are, of course, losing their monetary value because the currency that they're valued based upon is weakening. So the Bitcoin standard is all about converting your long-term treasury assets, that is your savings account, from a fiat derivative asset to a non-fiat derivative, a non-sovereign store of value that doesn't derive its value from cash flows in the future. And, you know, the 19th century solution was the gold standard, and the 21st century solution is the Bitcoin standard. And so that's what I mean when I say adopt a Bitcoin standard. I think that people that spend a few hours poking around in cryptocurrency, they oftentimes come forward with this observation that the cryptocurrency is a threat to a central bank and they have privacy concerns and the like. But it's generally only those that are spending a few hours. If you spend 100 hours or enough time to understand the situation, then you start to embrace a more sophisticated model, which is money can be decomposed into a currency component and an asset component. And these aren't really cryptocurrencies, they're crypto assets. And Bitcoin is a crypto asset, it's not a cryptocurrency. Currency is defined in the law as something you can exchange as a medium of exchange or in a transaction without incurring a tax obligation. So Bitcoin hasn't been a currency by law in the United States since 2014 when the IRS determined it to be property. And that's well understood by the regulators. And I think that if you look at comments, public commentary by Jerome Powell, by Christina Lagarde, by the deputy governor of the China Central Bank, by Gary Gensler, they've all commented that this is a digital asset. It's not a digital currency. And if you read the 140 pages of testimony by Janet Yellen, you'll see she's a very progressive, informed regulator that understands that crypto assets or digital assets like Bitcoin are a cornerstone for a 21st century economy and a force of good and can be used as a force of good. And all regulators will state as a matter of fact and because it's appropriate, that of course we have to make sure they fit into a regulatory environment and a framework so they're used for good and not by malefactors. So all of these conversations are oftentimes just cherry-picked comments. Neither the head of the EU central bank, nor the head of the US central bank, nor the head of the Chinese central bank has actually suggested that people should be banned from owning the asset. And in fact, in the example of Turkey you named, what they said was they didn't want people to use it as a currency. That's no different what the IRS said in 2014 in the US when they actually taxed it on transfer. They also effectively said you can't use it as currency. So basically stating that we don't want something to be used as a currency because it threatens our currency is not the same as depriving people of an asset. And even the Turkish central bank hasn't deprived or hasn't limited Turkish citizens from owning the asset. So I think that it's very, very important to understand that the future of the world is people, 8 billion people with mobile wallets with a currency layer and an asset layer. And the currency is going to be the dollar and the euro or the Chinese yuan. And the asset layer is going to be Bitcoin and then whatever other assets you chose to hold in them. And the government's provenance, or the government will of course demand control of the currencies. And where you have strong governments like the EU and China and the US, they will have a strong currency and those currencies will be successful. And where you have weak governments like in Venezuela or Zimbabwe, you will see the currencies collapse. They will lose their currency privileges. The citizens in those countries will download stable coins that will either be the US dollar or the Chinese renminbi. And the underlying asset framework or asset protocol and network that we use to synchronize all of those wallets is going to be Bitcoin.
So, Michael, what would you say is the biggest existential threat to Bitcoin, if there is one?
I don't think there is. I think that Bitcoin is going to be the emergent, strong money store of value asset in the 21st century. I think it's pretty clear that it has won this space. There are 8 billion people that need a strong money or a monetary asset if they're going to live a decent life. That asset needs to be digital. It needs to flow to 8 billion mobile wallets. You need three things. You need an asset which is deflationary. You need a global network to synchronize all those mobile wallets and all those applications. And then you need an open protocol so that you maintain real-time settlement and synchronicity between all the various layers if you're going to maintain the integrity and the trust of the network. And Bitcoin has those three things. It has the asset, has the network, has the protocol. And silver doesn't, gold doesn't, can't do it with real estate, can't do it with stocks, can't do it with bonds, can't do it with any fiat currency. If you look at all the other cryptocurrencies, the proof of stake currencies don't offer the security or the stability of a proof of work. And of the proof of work crypto asset network, Bitcoin is 100 times bigger than the next best one. So I think it's pretty clear Bitcoin's the solution to the economic problem of the 21st century.
And what would you describe that problem as being?
The problem is billions and billions of people need sound money in order to store their economic energy. So if I don't have a bank, and if I don't have a currency, and I don't have access to an asset, then I'm living hand to mouth day by day. And in the week or in the day when I can't get food or can't get money, I'm going to starve to death. You can imagine if I take away insulin from a type 1 diabetic, type 1 diabetics, they have no insulin, they can't form fat. So when they eat, they can't store that excess energy. It means that they're doomed to a life of, or like a fate of starvation as they waste away, no matter how much they eat. The problem in the world is if you're unbanked, and there are a billion people that are unbanked, and if the currency won't hold economic energy, you live in a country that collapsed currency or a weakening currency, then your economic vitality is being sucked out of you. So I would say sound money is a human right. The solution to the economic prosperity of 8 billion people on the planet is to install a thermodynamically sound digital asset which will store their economic energy over time, and then allow the synchronization of all those wallets over space so that they actually have the ability to function. That's the problem. Like, you want to put a value on that? Well, I mean, for the 2 or 3 billion people at the bottom of the pyramid, the value is like life. That's the value, right? How are you going to live a decent life without money and assets? But if you want to look at it from the top of the pyramid, the $500 trillion worth of money in the world is sitting in fiat derivatives, presumably conservatively losing 10% of its value a year. So you've got something like a $50 trillion energy drain or inefficiency in the economic battery of the world. The solution to the problem is install a digital monetary network that doesn't bleed energy. In essence, a trust network that allows hundreds of thousands, if not millions, of mid-sized banks and corporations to all trade with each other, settle with each other, and store their economic energy without corruption and without power loss, which we sometimes call inflation, but it's not just inflation.